Welcome to Wednesday. We're going to get some Wednesday wisdom from Peter Tuchman, a.k.a. Einstein.
Hi, guys. How are you?
First and foremost, Peter, just to maybe make me jealous, did you meet any of the Billions cast today?
We did. We had Wags, Dollar Bill. Right? It's a great show. Old school Wall Street.
Oh, man. You know what? I would say we're not on talking terms right now, but I have to interview you. So what do you think about Boeing testing the 200-day after all these developments, emergency landing, China buying $35 million worth from Airbus? What are your thoughts there?
You know what? You are barraging me with individual stocks, which I don't really like discussing. The only thing I'll say about Boeing is that it's something to address as far as the differentiation between the S&P in the market and the Dow. Okay? I'm baffled that Boeing, with all this marinating about what's going on with the company, that the stock is holding up as well as it does. Right? I mean, look, stock has had an incredible run. Let's just look back. If you look back at the graph, we're here in the middle of March. In January, Boeing was trading at $300. So this has been on a tear, right, for the last 3.5 months. And yes, it's retraced in a big way. Has it completely broken down? I mean, you have to realize that obviously there's stuff in the balance sheet that's proving that stock is still worth something, and it's worth something substantial. Obviously, there's some problems, but I don't really want to discuss it in particular.
Okay, how about we talk about the general market? Because you did say that we were facing a breakout earlier this month with the S&P. Where do you stand now, Peter?
Okay, so since we spoke last Wednesday, we had suddenly this narrative completely twist on Friday, right? What in half? I'm calling it the death cross. We had news coming out of Germany and France, okay, and sort of implying a lot of slowdown in global growth. We've only really seen, it's kind of baffling because we're here a few days later. We had that happen. We had an inversion in the 3-month and the 10-year, right? Yields, the things went negative in Europe. We came in here, the negative narrative came in. We had this death cross on the 3-month and the 10-year, an inverted yield curve. This is way above my pay grade, but we've seen that happen once, I think, 3 or 4 months ago, maybe 6 months ago, where the whole negative narrative, the market was booming, it was hitting record highs, and then suddenly the narrative changed to this global growth slowdown and China slowdown and whatnot. And we saw the market break, and that is something that seems to break the market, but we've seen no follow through on it. I kind of came out of Friday thinking, okay, this could be, the way the market sold off on Friday, it felt like maybe we're going to crack here a little bit. Maybe people are going to gauge that negative. And it didn't last more than a day. We rallied back. The market's been just off to the races every other day than Friday. Monday was sort of a flat day, was trading off this yield story, within a range. Then yesterday the market was up a couple hundred points. It faded at the end of the day and then rallied back. We did a wild round trip yesterday, up 250, came down to about up 50 and then closed up 140.
Any trends that you're seeing in the last hour of trading this week?
You know what? I think they're just buying the market. I think the people who are short and the people who are looking for bargains are not getting the break they wanted. They had it one day on Friday, and that looked scary. Then they realized, you know what? There's no follow through, and people are buying the market. We do have the end of the quarter coming up. We probably do have some underinvested people in the marketplace. We probably do have some people who are not getting, any relief on the short side. They're covering their things, and that's where we're at.